A very good morning to you. Thanks for joining us on Business Morning. I am BC Adebayo. We'll begin with oil prices, which drifted lower today as concerns about renewed COVID-19 lockdowns in the United States outweighed signs of a recovery in U.S. gasoline demand. Brent crude futures slipped 0.2% to $43.22 a barrel, and that came after gaining 0.5% on Wednesday, while the U.S. WTI crude futures were down 0.3% to about $40.76 a barrel. Oil prices were high on Wednesday as data from the U.S. Energy Information Administration showed that U.S. gasoline stockpiles fell by 4.8 million barrels last week, and much more than analysts had expected, as demand climbed to 8.8 million barrels per day, and that's the highest since March the 20th. Our conversation begins this morning with the burning economic issues at the domestic commodities market with the head of research at the financial derivatives company, Damilola Akibami, who's right here with us in the studio. Good morning, Damilola. Thanks for coming on the program.
Good morning, BC. Thank you for having me.
All right, now let's begin with the latest development in the crude oil market space. Okay. Now, of course, this morning Brent is trading at around $43 per barrel, and this comes as Nigeria plans to reduce offshore oil workers. What's the implication of all of this?
Yes, okay, so first of all, what's happening in the global oil market is because obviously the U.S. is, in some U.S. cities, they're reimposing lockdowns because of the surge in infection cases, and there are concerns that this may actually outweigh the demand recoveries for U.S. gasoline demand. But obviously, market demand dynamics will continue to affect prices. And in Nigeria, why we're seeing a lot of international oil companies removing their workers from onshore and offshore rigs is actually because they're trying to contain the spread of the coronavirus, because working on the rigs is also like an incubator for the virus to spread. So that is what we're seeing happening, and it's not even just in Nigeria. At least I know Total, the likes of Mobil, also in other African countries, are pulling out their workers just in order to contain the spread. And for Nigeria, this has had a significant impact, because we know that even in June, the oil rig count dropped sharply to about 8 rigs, active rig count. So that just shows that exploration activities have declined significantly. And obviously, if your exploration activities decline, it means that production too will be affected. And Nigeria also needs to comply with its OPEC quota of 1.4 million barrels per day. So definitely, we're going to see some production cuts in the near term.
Perhaps this once again points to the need for the country to step up its diversification plans. For instance, now let's talk about a country like Gabon, yes, which saw its sugar output rise by 4% in the first quarter of 2020, and that's just as the price of sugar in Nigeria now sells for about 21,000 naira per bag. So what's the correlation?
Yes, so Gabon also, aside from oil, because it's also an oil-producing country, Gabon also produces sugar, and the government has invested a lot in the sugar industry, and they're targeting to increase the sugar production. And in Q1, obviously, in most African countries, the impact of the health crisis was not as severe, so they recorded an increase. But I'm sure when Q2 numbers are released, we might see a contraction. And the government has also planned to invest about $2.8 million in the sugar industry, just so as to boost production. And for Nigeria, what we're seeing, Nigeria also, we also grow sugar in this country, some sugar-producing areas such as Adamawa, Kano, Sokoto. So they're mostly in the northern part of the country. So we actually do have some sugar-growing areas, but Nigeria still imports a significant amount of sugar to meet the local demand.
And why is that?
Yes, it's just because local production is not sufficient. So local production is just about 6 to 8% of what we consume. So over 90% of sugar consumption is met by imported demand. And the government has actually done a lot of things to try and encourage local production. So ranging from increasing the import duty to levies on imported raw sugar and even refined sugar. We've also seen VAT increases. So these initiatives the government has tried to put in place just to encourage local production.
But is it yielding any results?
Well, it is to an extent, obviously not as quickly as we want. So for instance, in 2012, there was a sugar master plan that was released, and the government is targeting self-sufficiency in sugar by 2020. Definitely, we're still importing a lot. So that is that is yet to be achieved. But then we know that the likes of Dangote Sugar, Boa, and even Golden Penny under flour mills of Nigeria, these are some of the major sugar producing companies rather in Nigeria. They are actually also investing in the production of sugar. We know that even the border closure that was implemented last year, that to an extent has helped domestic production because it has curbed smuggling, which has been a major constraint to sugar production. So what this industry needs right now is obviously investment. I talked about Gabon with the government investing about $2.8 million. We know that we need investment in the industry, obviously infrastructure development, getting the right techniques, and then land is a major issue. I mentioned the states that produce sugar in Nigeria, but again, the quality of land matters. So if the quality of land is not up to par, obviously yields will be affected, and that would affect productivity and output. Another major issue is irrigation. Most of the sugar producing areas are in the north, and the level of rainfall is suboptimal, so you have to have irrigation facilities, and if this is not available, it will affect output. Insecurity is another major issue. So there are challenges definitely that are affecting the local sugar industry, but then there's still the upside there, because now we know that with the border closure, with the increase in import duties and whatnot, which is now making imported sugar more expensive, it's giving room for domestic production to increase. So that should actually support the local sugar industry.
But what about the fact that people are actually trying to stay away from consuming as much sugar, due to health reasons? Does that in any way also have an implication on the sugar industry?
Yes. So Nigerians are becoming more health conscious. Everyone is trying to watch their weight and whatnot. So, and obviously the health issue, diabetes and whatnot. So definitely that is a concern for sugar demand. But sugar can be used for so many other things aside from consumption. And in terms of, for instance, ethanol, sugar can be used in the generation of ethanol. And even in the master plan, sugar master plan I mentioned earlier, that is one of the objectives of trying to actually grow ethanol. So you can use sugar for so many uses. So fine, on one hand, people might not be consuming as much sugar because of health reasons, but you can use it to produce ethanol, which is a fuel which can also replace the premium motor spirit. You could also use it even in the generation of electricity. So there are various other uses for sugar.
So we need to look at the broader picture
Yes.
here. Now, yesterday, the National Bureau of Statistics released new data showing that over 50% of Nigerians are below the age of 20, and that average household size in Nigeria is about 5 persons per family. So if we're to look at this now, is this likely to have any effect on the demand for commodities?
Definitely, because clearly we have a young population, if a significant amount are below 20 years, and the demand or consumption pattern of a toddler, of a young child, of anyone below 20 is definitely different from a middle-aged person or an elderly person. So that definitely would affect the consumption pattern. Growing individuals, growing people need more protein and other nutrients compared to what a middle-aged person who might now be, because again, most Nigerians that are actually health conscious, they fall within that age bracket of the middle age and the elderly. So definitely you would see some changes in the consumption pattern, and it would affect commodity prices, because if you have the bulk of the population consuming the likes of more proteinous items like milk, meat, fish, and all that, and dairy products, definitely you will see the demand for those commodities increase, and subsequently their prices too would increase.
Now, where are we in terms of commodity prices now? Have they gone up, or have they, reduced with the rains that are here?
Oh, well, right now we're still in the planting season, although towards the end of Q3 the harvest season will start. So I think commodity prices are still relatively stable, they're high. So usually prices are sticky downwards. Even when output increases, the prices don't crash significantly like that. And with the rains and what have you, now that again interstate movement is now allowed, so that would improve the logistic constraint that we experienced earlier in Q2. So as more commodities are being moved from state to state, that increases the supply, and that should bring down prices. So that, coupled with when the harvest season commences, we should see prices subside.
I'm sure many are looking forward to that. Well, let's talk about the stock market now. Of course, that market has been largely negative in the past few weeks, and data has, of course, brought the year-to-date to minus 0.82%. trends. But what direction do you see the markets in the coming days? And tell us what's even been responsible for these huge declines that we've seen.
Well, what we've seen happen in the domestic stock market, which is also similar to what has been happening globally, was obviously the health crisis, the heightened uncertainty going on in the markets, the shutdown of companies, or the disruption to trade and what have you. So what we saw was like most of these stock prices, they fell below, their prices fell below their market value. So obviously, most of them are bottomed out. We should expect to see them start to increase. And also, between May and June, that was the peak of the earnings season. So a lot of results were being released. So that also, the performance, though it was mixed, there were some sectors like banking sector that released some positive numbers, but the brewing industry was heavily affected, obviously because the trade sector, the manufacturing sector were all affected by the shutdown and the lockdown. But now what we're seeing is, like, as we enter Q3 with the resumption in activities, now flights have commenced, now you can move from one state to another. So that pick up in aggregate demand, the fact that consumers, or rather businesses, can produce more, there's increased industrial activity. We should see that impact positively on companies' numbers. So Q3 numbers will be better, but Q2 numbers are going to be released now, obviously, because that was the peak of the shutdown. So the severity of the impact of the crisis will be very stark when the numbers are released. But I think between Q3, Q4, we should see a recovery. And it's not going to be smooth. Definitely, it's going to be uneven. Some sectors will recover faster than the others. The likes of, for instance, aviation that was contracting, definitely will now, as more people travel, although the numbers from yesterday were not encouraging, but as more people travel, definitely you see the aviation sector pick up. Banking, definitely, information and communication technology, those are sectors that have benefited from this shift to virtual work lifestyle and whatever. So those ones definitely would recover a faster pace of growth.
Well, let's dwell more on the fact that, of course, some airports resumed operations yesterday. And just like you mentioned, of course, we saw just quite a few passengers. Yes. But what would you see, what's your assessment of the development, especially as it concerns economic activity?
Well, yesterday was the first day, and just about maybe 4 or 5 airlines started operations yesterday. So it was not surprising to see that the turnout was low. And again, the market, everyone is looking at what is going to happen. Okay, how did the first day go? Were there protocols in place? Were they adhered to before? So once confidence builds in the aviation industry and people can see that, yes, indeed, things are being put in place, we can travel from one place to another. So definitely confidence will pick up and you would see increased passenger traffic. And that would obviously be positive for economic activity, like I mentioned earlier, because obviously logistic constraints are addressed, there's a better flow of output and demand would pick up. So in the long run, as long as there is no resurgence in infection cases, it should impact positively on economic activity in Nigeria.
And what about the impact on the Forex market? Now, of course, we saw the Naira resume trading yesterday at the official market at 381 to the dollar. Are we in any way seeing the effects of the unification of the exchange rate by the CBN?
Yes, we've started seeing the effect of the unification of the exchange rate, and that's why we saw that the official rate has been moved to 380, 381 from 360, and also even the turnover, the Forex turnover, the investor and exporter window also increased significantly. And the fact that the CBN has done this or has made this move is sending the right signal to investors that, yes, the policymaker is serious about exchange rate reforms. Now, more importantly, is the supply of Forex, because you've addressed the price to an extent. So it will also address demand because you're mopping up over 2 trillion naira. So obviously demand is going to be affected, but how can you boost your Forex supply? We talked about diversifying our revenue base, trying to get more sources of export revenue. So for instance, can we improve on our sugar production? What are all revenues saying and all that? So if you can boost export revenues, definitely with impact on your external reserves, and the CBN would have more buffers to support the currency. And as global economy recovers and we start to see remittances trickle in, diaspora flows trickle in, that would shore up our external reserves, coupled with the international borrowing funds that the government is trying to achieve. That should help to shore up the currency.
What about the parallel markets now? Because that's where most people will go. That's the first port of call for most people who want to have access to Forex. What's the state with the parallel market now, even if the CBN, even as the CBN is yet to resume sale to that market?
Yes, actually, most of the Forex transactions actually carried out at investor and exporter window, and the CBN doesn't actually acknowledge the parallel market as a legal market. But so far, the parallel market has been steady and stable at 461. And what we are foreseeing is that in the medium to long term, especially if your Forex supply improves, you should see a gravitation even of the Forex market, of the parallel market rate towards the IEFX rate. So we should see a convergence of rates between 380 to 400 naira per dollar. But right now, because they're still fine, we've seen that move to unification, but there's still a lot of uncertainty. And as economies recover, as the Nigerian economy also improves, and if our Forex supply also improves, we should see an increase in Forex supply, and then we should see a gravitation of the parallel market towards the IEFX rate.
But what about power now? Are there any latest development in the power sector worthy of note?
Well, so far, one would expect that this is the rainy season and then power supply should increase, but that is not what we're seeing right now. In fact, power output has been below 4,000 megawatts since June 19. And what we're seeing right now is that also it's because of constraints. So we have grid constraints, we have generation capacity constraints. So that is still a major issue. And right now, we know that obviously the federal government has postponed the implementation date of the cost-reflective tariffs, the increase in the tariffs to at least Q1 2021. That also needs to be addressed, because for you to attract investment into the power industry, the pricing has to be right. You have to be able to attract or incentivize investors to bring in their funds to invest in the market. So, but right now, what we're seeing, one would have expected, obviously, there'll be increase in hydropower, but that's not what we're seeing right now. The constraints definitely surpass or outweigh what is being generated and distributed from the grid.
Now, let's touch on the oil market again, but this time around, I'd like you to give us projections where we're likely to see prices in the coming days. Are we likely to see it, around current levels?
Well, right now, oil prices are trading like in a holding pattern, because the market monitoring panel of OPEC and its allies, they're going to meet next week, Wednesday, July 15, to decide on whether they're going to extend the 9.7 million barrels output cut by maybe another month till August or to whenever. So right now, oil prices are going to continue to trade around that level, depending on or pending when the outcome of the meeting is released. So I think oil prices will remain around the likes between $42 to $45 per barrel. Then depending on the outcome of that meeting, that would determine the trend afterwards.
We'll see how all that goes. Many thanks, Head of Research at the Financial Derivatives Company, Damilola Kibabi, for coming on the program.
Thank you.
The Nigerian Stock Exchange now has an upgraded version of its issuers portal, technically known as X-Issuer. This is a web-based portal put together by the quasi-regulator to enable companies file their quarterly and annual financial results in an electronic format to the exchange. According to the NSE now, the upgraded portal comes with improved features and functionalities aimed at enhancing compliance with regulatory experience for companies. Well, the Executive Director, Regulations Division at the Nigerian Stock Exchange, Mr. Nuadi Awe, joins us now to tell us more about what has changed on the X-Issuers program and other matters arising in the post-listing initiative of the Nigerian Stock Exchange. Good morning, Mr. Awe. Thanks for joining us on the program. Well, since the lockdown, the Nigerian Stock Exchange is one of the regulators that has activated an effective business continuity plan. Is that the precursor to the upgrade of the X-Issuer portal?
Thank you very much for having me. The X-Issuer portal is actually a portal that we've had since 2013, and what we've done is an upgrade to it. We have been open for business since the lockdown. We've been trading seamlessly as any market should do, and that's because we prepared for the proverbial rainy day. We have a very robust business continuity program at the exchange, which we tried and we tested several times. And so when the incidents and all the challenges around the coronavirus started to reflect themselves, we immediately implemented our business continuity program to enable us to be able to be resilient and do what we're doing as normal even with the challenges. And so what we did was, about a week before the official lockdown at the end of March of 2020, we had already taken decisions in the office that we were going to temporarily close down our trading floors and give all our traders the opportunity to trade remotely. And the reason why we were able to do that is because we have all the systems that allow remote trading. We have a very super trading engine known as XGen, which we've had since 2013, and that trading system enables remote trading. We had traders already on remote trading, and so we transferred the remaining ones onto remote trading facilities as well. And we've been trading seamlessly and doing all the things that we will normally do in a virtual fashion. Now, specifically on X-Issuer 2, X-Issuer 2, as I said before, we had X-Issuer 1, which is a 2013 system. X-Issuer 2 is an upgrade on X-Issuer 1. It is a secure web-based portal that allows our issuers and others who have products listed on the exchange to communicate with us remotely. And that communication is by way of whatever it is that they're supposed to communicate to the investing public and to the exchange. Let me be specific. So financials, for example, which companies, as listed companies, are supposed to file with the exchange. Since 2013, they filed them through the X-Issuer 1. In X-Issuer 2, they now have a more customer-centric system that is easy to use. The interfaces are more customer friendly, and they also have a number of other channels. For example, we now have a release calendar channel. What does the release calendar allow a company to do? It allows it to put its calendar of future events into the system, and they flow directly to our website so that the investing public and others who are interested in the information can get it from there and therefore make the types of decisions that they need to make about that information. It also has a number of other upgrades, such as with directors and other insiders dealing, to enable that to flow straight from the portal to our trading system as well as our website. We have upgrades around the earnings forecast channels and a number of other initiatives that allow the entire experience of getting information to the market to be a seamless one and to be a quick one. The information asymmetry is therefore extremely reduced because it's real time and it flows directly, and the people who need to use the information are able to get the information quickly. In this regard, of course, I will say that the exchange, this is not the only initiative that the exchange has put out in the recent past, even during all the restrictions that are associated with the coronavirus. You may know that we recently launched a data portal as well, and we recently launched an initiative with a system called Sentry GRC for entities that want to that have to deal with governance, risk, and compliance issues, to help them to appropriately to be able to do that within the context of a one system. The data portal is extremely important because it helps for people to get the market data that they need, whether they need that data real time or they need historical data, they need index data. Data, as you know, is the highway on which the capital market works, and we're very, very keen as an exchange to ensure that, notwithstanding the challenges, we're resilient and able to produce these upgrades for
all right,
those that need them.
Ms. Awe, we would also like to know how the X-Issuer will improve the experience of issuers with the exchange and, of course, its impact on market integrity.
Okay, so what I think I touched on the very first one, the information asymmetry. So what markets always try to do is to reduce the asymmetry between those that own the company and those that are stakeholders in the company. And one of the things that the upgrade does is to ensure that issuers are able to send even more information and able to send it in a way that is easily assimilated by the market. So a CFO or a company secretary or their duly accredited staff can get on the system and push out the release calendar of the company, and almost immediately it gets to the market. They can get onto the system and push out information about the trading by insiders. Almost immediately it gets to the market. They get out and they push information about other things that the company is doing with respect to other forms of communication that the company wants individuals and corporate entities to know about, its stakeholders to know about. Seamlessly, that information gets added to our trading engine so that brokers and other users of the market can use it immediately, or it gets onto our website so that even students, academics, anybody that is interested in information about the company has access to it. So it helps the company to fulfill its post-listing obligations around disclosure. It helps it to fulfill the obligations under the Nigerian Code of Corporate Governance. You know that there's a principle around communication with your stakeholders. There's another principle around disclosure. These are key things that Exisure helps the entities that are using this system to do. Another thing, fund managers who have funds listed on the exchange also now have access to Exisure, which they didn't have with Exisure Exisure version 1. They now have access through Exisure to push out information, critical information about their funds, pricing, other information that people will be interested in about those funds to the market.
Okay, so how aligned? Okay, I was asking, how aligned are these new features with the recent Code of Corporate Governance Code guidelines of the Financial Reporting Council of Nigeria, which the NSC is in support of?
They are completely aligned, as I said in my prior answer. You know, under that code, there are principles to do with communication with stakeholders. This is perfectly aligned. This is a perfectly aligned mode of communication with your stakeholders. A listed company gets onto its own account on the web portal, that is the Exisure, and transmits information, and that information hits our website immediately. Upon transmission, click of a button and it flows to the website. We have used automation to ensure that that company is able to comply with that principle of the code. There's also the disclosure principles of the code. Again, this system allows the companies to comply in a very, very easy fashion with those obligations. So we think it's all coming together, it's all working together, and it really helps to place Nigeria where it should be in the Committee of Nations, where there's governance in the market, where there's transparency, and where there's integrity in the market. And we think it's using technology to really the highest levels of what one would expect as an ethical human being.
Exchange has been recording more of primary market activities, especially on the debt capital side of things, with a total capital raise of over 968 billion naira since the lockdown. What factors would you say have contributed to these activities?
Well, I think one of the factors that have contributed to the activities, clearly that this is a good time for that market, the debt market, but also the fact that the market is open. If the market is not open, then you can't do that. And so what we've done is all our teams are working. So the physical doors of the exchange are currently open only to essential services because of the challenges caused by COVID-19. But the individuals who work in the exchange, like me and all of my colleagues, are working remotely. And it's technology and the resilience that we've built through our business continuity plan, which we've deployed seamlessly, that allows us to do that. The market is therefore able to take advantage of that because everything that we could do when our doors were open, we're able to do remotely. The reviewing of applications. So if you bring an application for the purpose of listing a fixed income transaction, we can deal with that. We deal with it remotely. We give you your approvals remotely. We communicate with you remotely. We list remotely. And, you know, we've even had closing gong events remotely. So we've basically used our business continuity to ensure that the market is open for business. And that is what the folks who want to raise capital by way of debt have done. And we're very pleased that they've been able to raise over 96 billion naira within this period of the lockdown.
Just actually talked about a series of virtual closing gongs that we've had amidst the lockdown and also the listing of bonds. Now, let's dwell on the listing of bonds now. And the latest being that of Lapo Microfinance Bank, which was about a 6.2 billion naira bond program seen last week. But are there possibilities of a company listing this period? And how's the exchange bracing up for that?
There's every possibility of a company listing during this period. As I said, our processes have been moved remotely. So all we need to do, we can still receive listing applications for Equities. That's a company listing. We will review it. Our governance processes are ongoing. Indeed, you may know that about 2 months ago, the exchange released a thought leadership piece on remote meetings. So we ourselves are able to work remotely. Our council and the committees that are responsible for approving listing applications have been working remotely and meeting remotely. So if an application comes, the individuals in the relevant teams that appraise that application are able to appraise remotely. The governance process to approve that application is able to appraise remotely. The technology to list is, as I said, XGen is available remotely and has been that way since 2013. So we just deploy the processes and we get it done. This market is open for business, whether it's a fixed income or any other type of product. We have the ability to get it done. And we've shown that in the fixed income space. We've shown that in the closing gong ceremonies that we've done virtually. We've shown it in the facts behind the sustainability report event that we did involving Cotreville Business Solutions also recently. And so we're actually quite excited to show the world that we can still operate and that we're a resilient market, able to do all that we could do in physical terms and translate it seamlessly into remote terms.
Executive Director, Regulations Division at the Nigerian Stock Exchange, Ms. Tinuade Awe, thanks for sharing your time with us.
Thank you very much. Have a good day.
You too. Well, we're still staying with the markets, but this time Edidiong Iwang is ready to take us through yesterday's numbers. Good morning, Eddie. Thanks for coming on. And of course, yesterday, thankfully, we saw the markets sustain the positive sentiments. What was behind that?
Good morning, BC. Thank you for that. Well, that was largely driven by banking stocks. The all-share index rose 0.75% to 24,278.07 points, while the equity cap was higher by 94 billion naira to 12.664 trillion naira. Total turnover of volume and value were higher yesterday compared to Tuesday's session as 232.60 million units worth 4.69 billion naira traded in over 3,500 deals. Once again, the financial services sectors posted the strongest gains yesterday. The banking counter surged 3.41% as almost all listed lenders advanced yesterday, apart from Ecobank Transnational Incorporated and Sterling Bank. The other financial services sector was insurance sector, which gained 1.10% yesterday. That was due to bargain hunting. So that counter, we've seen a lot of back and forth between bargain hunting and profit taking on that counter. Consumer goods declined 0.21%. Only 3 stocks, Dangote Sugar, Flour Mill, and Honey Flour, had a change in price yesterday, and all 3 of them were negative. Industrial goods was up by 0.12%, while oil and gas declined by 0.18%. So, joining me now to talk about the equities market is Phil Anegbe, a research analyst at Cardinal Stone Securities. Good morning, Phil. Thank you for joining us on the program.
Yeah, good morning. Thank you very much.
The banking sector drove gains in the markets for 2 consecutive sessions. Is that trend likely to continue, or should we expect some profit taking on that counter soon?
Okay, broadly, we expect that you will see pockets of profit taking, given that sentiments remain a bit concerning globally, especially with relation to concerns about our oil prices. We have, of course, seen a few positive developments of recent. And I think a noticeable one is the recent repricing of the currency at the official window, which is likely to be well received by foreign investors. But on a net basis, you expect some profit taking after the days of rally we've seen, as investors continue to keep an eye on oil price developments across the globe.
Yesterday, the NSE issued listed companies a deficiency filing notice for failing to comply with the exchange's directive to issue a press release. Now, what would that mean for those companies, and what happens if they default again?
Well, it's always going to be concerning because it's important you meet regulatory requirements across board. And it also goes to more or less, it's also likely going to drive the way investors perceive our companies, because corporate management is also something that is very, very key in terms of consideration of foreign providers of capital. So I think it's still going to be key. People will continue to watch that closely as the sessions go by.
Any idea what direction the markets will go today?
I think directions of the market today is likely going to be dictated by profit-taking activities. We've seen a few rallies across, I think, for a few days that we've seen some rallies. So you expect investors to take profits because the medium-term to long-term view, or the medium-term view for the market is still somewhat bearish because of the current crisis. So profit-taking expected in some counters today.
Thank you for your input on the program. Phil Anegbe is a research analyst at Cardinal Stone Securities.
Eddie, we'll see if Philip's projection would actually come to pass. He's saying that there might just be profit taking. Well, we have a few hours to find out if that will happen. Juliana Olayinka is ready for us at our London studio to fill us in with this morning's market headlines. Good morning, Juliana. So despite unveiling a £30 billion mini budget designed to tempt nervous consumers, these are not the best of times for Rishi Sunak, as he's been warned again that he'll need to act far more decisively to prevent mass unemployment this autumn. And the opposition leader, Labour Party, say that his plans do not go far enough. What more do they want from him?
Well, it's a £1 billion question. And, if you look at yesterday, I think the £30 billion that was dished out in less than 30 minutes really did impress the spectators and, I would say, as a whole, the media. But if you compare what the Chancellor spent yesterday to Germany, where Angela Merkel pledged over 100 billion euros, there is clearly a gap, and we only pledged about 1.5% of GDP. But Anneliese Dodds, she's the shadow Chancellor of the Exchequer. She's been doing the media rounds this morning. And really what the Labour Party are accusing Boris Johnson government of doing is dodging the big spends, these mass unemployment that's expected to happen much later in the year. They believe that they've delayed that. Now, the job retention scheme, which is coming to an end at the end of October, the Chancellor is now offering an extra retention bonus. So of the 9 million individuals that are furloughed, the Chancellor is offering £1,000 per employee if you are going to keep them in a job until the end of January. Now, one of the issues that the Labour Party have with that is they believe that all of the companies that want to take back their employees have already decided on doing so. So they believe that that £9 billion, or at least the bulk of it, is completely wasted and should be put to other schemes, such as the automobile industry, the airline industry. They also wanted this summer statement to be a fully fledged budget. We are expecting a budget sometime in autumn, but the Labour Party believe that that's too far away and they should have made more definitive decisions in yesterday's statement. I've got to say, on a whole, it appears as if most of the other parties within the House of Commons did accept some of the measures that Rishi Sunak is doing, but they don't feel it's gone far enough. Oh, as well, there's also this new scheme that they've called Eat Out to Help Out, where basically during the week they're offering people £10 discount if you eat out at some popular restaurants such as Nando's or Pizza Express. And the Scottish National Party really took offence to that, because they said, you know, you're offering money for some people to eat out where there are vast swathes of families across Britain that cannot actually afford to eat at the moment.
Well, let's talk about Ryanair now. Of course, the airline has agreed to keep on all UK-based cabin crew in return for pay cuts. But the deal would involve the crew at the budget airline accepting salary reductions of about 5 to 10% over the next 4 years, or at least until its business returns to pre-pandemic levels. Is the union really accepting this offer?
They have accepted it, yes, they are. And this comes after last week we had a situation where Unite were representing the pilots, and the pilots of Ryanair, I believe there is about 260 of them. They also agreed to take this pay cut over the next 4 years, or as you've said, until the airline industry recovers to its pre-COVID numbers. And this is really to save jobs, of course. In May, like many other airlines, Ryanair announced that they would have to cut 3,000 jobs because they have suffered. Their business and their revenues have completely crippled during the lockdown. And so they did make the arrangement with the pilots first. They were still in these ongoing discussions with a lot of the cabin crew workers. And yesterday they did announce that there have been an acceptance. So the lowest paid workers will be accepting a 5% reduction in salary. The highest paid will be accepting a 10% salary cut. And apparently this is going to save 1,800 cabin crew jobs.
All right, Liam Fox, now Britain's former International Trade Secretary, has been nominated by the UK to be the next head of the World Trade Organization. Why was his name put forward?
Well, it's an interesting question, and it's one that's caused lots of controversy. We know that the Brazilian head of the World Trade Organization, Roberto Azevedo, he will be stepping down early. I believe he had 2 terms, and he is going to be quitting at the end of August. So this is coming at a really crucial time for the World Trade Organization. Of course, the 2 biggest economic powers are in a huge spat over trade. US President Donald Trump already said that he feels that the World Trade Organization is not fit for purpose, and America are already giving more than enough. So Boris Johnson's government have appointed Liam Fox. They said they've done this appointment because he has decades of global political experience, as well as experience of running his own trade portfolio. He was before, under Theresa May, the International Trade Development Secretary. But there have been lots of eyebrows raised across parties. They're not happy, or the Labour Party and the Scottish National Party are not happy that Liam Fox's name has been put forward, because he is a prominent Brexiteer, and they believe that his appointment is completely political, that it won't serve the best for Britain. And also in Europe, it may be pretty difficult for Liam Fox to even get the backing from some of his EU counterparts. So far, nobody within the EU bloc have nominated anyone from their party. But Liam Fox is somebody who's seen to be a little bit arrogant, a little bit audacious, and he was very boastful about the prospects of Britain's global future once it's outside of the EU. But, of course, Boris Johnson is completely standing behind him, and they think he's going to be the best man for the job. I believe nominations close at the end of this week, and we'll be able to find out next month whether or not Liam Fox has been successful.
Fingers crossed to that. Well, thank you. We'll see you again at 1:30. And it's back to Edidio for a review of the debt and currencies markets. Over to you, Eddie.
Thanks, BC. Well, the bond market closed on a positive note yesterday as average yields declined by 23 basis points. We saw demand on the short end of the curve, the 14th of March 2024 and the 17th of March 2027. In all, we had 31 deals worth 13.61 billion naira. The Nigerian Treasury bills market also closed positive yesterday, with average yields declining across the mid-end of the curve. That declined by 30 basis points. So buying interest on the 26th of November 2020 maturity and the 12th of November 2020 bills. We saw 14 deals worth 1.21 billion Naira. Now, it's a different picture on the at the automobiles market, where yields increased with sell pressure across the short, mid, and long-term maturities. There were 13 deals on that counter worth 16.50 billion naira. But let's bring in Babajide Solanke, a fixed income dealer at FSDH Merchants Bank, for more. Good morning, Babajide. Thank you for joining us on the program.
Hey, good morning. How are you?
I'm very well, thank you. What was the reason for the increase in yields in the OMO market yesterday?
Well, just have a consideration of what has been happening in terms of liquidity constraints. With the liquidity constraint in the market, we have hardly any money available for people to either speculate or invest in the market. So we continue to see sell-off pressure as we continue to create liquidity to meet maturing obligations of the kingdom that have to meet even as a call.
So what direction is the market likely to take today?
Well, the direction of the market is still consequent on available liquidity in the market. If you understand what's happening, the central bank continues to make sure that everybody is fine in the system in terms of ensuring price stability in price of local goods and services, in terms of local inflation and exchange rate policy, which is beneficial to everybody in the long run. So that liquidity constraint is consequent upon that, and we will continue to see that liquidity constraint depending on the maturity of market operations as they occur. As you know, this week we have hardly any maturity, just about 16 billion matured this week. Next week about 170 billion. So we still have liquidity constraint, at least in the short term. By the time we get it to October, November, December, we see some liquidity freed up, and because we have some level of high maturity at that particular period. But for in the short term, we continue to see that liquidity constraint, we continue to see more sell-off than buying in the market.
Thank you, Babajide Solanke, for your input on the program. He is a fixed income dealer at FSDH Merchants Bank. But before we go, let's just take a quick look at the NASD OTC market. That segment of the market declined by 0.50% yesterday to 708.20 points. Market cap, of course, also decreased to 520.22 billion naira. Now, volume surged on that segment of the market by to 315,967 units, worth 7.41 million naira, and all of that was traded in 10 deals. So that is on the market with BBC. Over to you.
All right, Eddie, of course, we will always hope for a profitable trading day. And that's where we wrap up today's program. Thank you for watching. I am BC Adebayo.